Investing in gold, stock, or BTC, which is the best option? There's lots of options available to a would-be investor, and picking apart the pros and cons of each can let you know which is worth backing, with your time and with your wallet. In this short article, we'll be discussing 3 of the most popular markets to trade in: gold, stocks, and cryptocurrency, Bitcoin, BTC. Investing in gold, pros and cons. We're starting with gold as it's a good option for a long-term investment and generally considered safe, though this is not a hard and fast rule. Pros. Security. While stock markets crumble and crypto is subject to frequent shifts, the value of gold generally doesn't move with the whims of the market. It's commonly called upon by investors when things begin to take a turn for the worst. Diversity. Many adopt gold as part of a diverse portfolio. It can help you to spread risk across your existing investments. Options. There are lots of different ways to invest in gold, either by physically purchasing bullion to sell later, or opting for an ETC, exchange-traded commodity, which tracks the price of gold on the market, or directly investing in a gold refinement or mining company. Cons. Gains. Gains from gold are generally low. You should look at it more as a form of interest on an existing portfolio than a way of generating an income, and you'll only extract value if it continues to appreciate over time. Risk. All forms of investment come with risk, and while gold is often considered stable, it can be volatile. Buying shares in mining companies will also subject you to the ups and downs of the market. Investing in stocks, pros and cons. The stock market is the most popular option for investment and is becoming ever more popular over time. Here's why. Pros. Gains. Compared to gold, stock can offer far higher gains on an initial investment, with the average yearly return settling at around 10%. Liquidity. Unlike purchasing physical assets like gold or property, stocks are a fluid option, easy to invest in and pull out of at a moment's notice. Personal value. The stock market allows you to support companies you actually love as long as they are publicly traded. Cons. Volatility. Stocks are famously volatile, and every 3 or so years, you should expect a general depreciation in the market. According to The Motley Fool, if you're not content to lose 10% of your investment, avoid stocks. Investing in Bitcoin, pros and cons. Cryptocurrencies are still relatively new as a financial option. Bitcoin remains the most popular choice for investors. Pros. Gains. Investors initially flocked to Bitcoin because it offered incredibly high gains. It has the highest market cap of any cryptocurrency. Real currency. Many businesses continue to accept Bitcoin as a form of real payment. Microsoft perhaps the most high-profile of them. Cons. Volatility. Cryptocurrencies can be extremely volatile, and Bitcoin itself is in the midst of a year-long decline, though some expect the popular currency to return to long-term growth. Environmental impact. The climate-conscious investor should be aware that mining Bitcoin is extremely energy-intensive. Conclusion. So which is the best option? You might have worked out what we're going to say. Diversify. Spreading risk across many options will help to minimize losses. But we'd also add that for a new investor, Bitcoin might be worth considering only if we start to see a general increase in its value. Keep your eyes peeled.